Are high interest rates setting the stage for an economic shakeup?
That's what we're diving into today. Dr. Emily Brown, Graham Stephan, and Dr. Mark Thornton share their expert insights into these shifting dynamics.
With our AI-generated summaries, you won't have to spend hours sifting through data, just the crucial takeaways in minutes.
So, fasten your seatbelts. First up, Dr. Brown breaks down the impact of skyrocketing interest rates on investments.
And don't miss Graham Stephan, showing how geopolitical tensions are shaking the market's stability.
This is just the beginning. Let's jump in and uncover the latest insights.
We're exploring insights from Dr. Emily Brown regarding the rise in interest rates.
Dr. Brown provides insights on what these changing rates mean for the economy.
Dr. Brown points out that rising interest rates pose significant risks to investors.
These changes lead to market shifts and will affect consumer behavior. Dr. Brown outlines how rising rates affect bond market stability.
Many investors are wary as higher borrowing costs impact growth. Dr. Brown discusses how the Federal Reserve influences inflation through rate adjustments.
She highlights the need for equilibrium between growth and inflation. Dr. Brown insists that investors adapt to rising rate scenarios.
She advises focusing on investments that can withstand higher rates. What does Dr. Brown predict for future interest rates?
She anticipates rates may remain high based on inflation and economic indicators.
Dr. Brown emphasizes the importance of monitoring the Fed's actions.
She advocates for adaptable investment strategies to navigate rising rates.
Understanding these dynamics is vital for financial planning. In today's discussion, we're exploring the fluctuations in the market related to recent geopolitical comments.
Graham highlights how remarks from influential figures can lead to volatility.
Graham points out that statements made by political figures can lead to immediate changes in investor sentiment.
He elaborates on how uncertainty can lead to rapid shifts in trading behavior.
Graham emphasizes the need for investors to track statements made by political figures.
He discusses the responsibility of investors to remain informed amid changing political landscapes. He suggests that understanding market patterns can enhance investment tactics.
Graham encourages a proactive mindset in adapting to market changes. What future trends does Graham envision for the market?
He predicts that lingering geopolitical issues could lead to persistent market challenges.
Graham concludes by stressing the importance of staying informed through tumultuous periods.
He advises that flexibility in investment strategies is key to long-term success.
Today, we're examining the concerning rise in mortgage delinquencies and how they reflect current economic conditions.
This trend suggests a worrying pattern for landlords in the real estate sector.
Current mortgage delinquency rates hint at a broader crisis, making it tough for many landlords to meet payment obligations.
These trends echo the red flags that preceded the last financial meltdown. The higher cost of borrowing is significantly stressing landlords' financial stability.
Simultaneously, high inflation congestion affects tenants' ability to pay their rents. As the trend of defaults rises, we could be on the brink of a housing market decline.
Investors will need to tread carefully as they assess the changing landscape.
Supporting the rental market requires implementing strong policies for landlords and tenants.
Landlords should explore available assistance programs to navigate these challenging times.
Today, we're examining the alarming warnings from Dr. Mark Thornton regarding the condition of fiat currency as discussed on Kitco News.
Dr. Thornton describes fiat as being in critical condition, pointing to the significant lack of trust between central banks.
Dr. Thornton emphasizes that the stability of fiat currency hinges on public trust and perception.
He warns that current distrust among central banks poses a significant risk to economic stability.
Moreover, Dr. Thornton suggests a shift towards alternative currencies may occur if this trend continues. According to Dr. Thornton, trust is the foundation of fiat currency, and any erosion could lead to severe consequences.
He provides historical examples where lack of trust caused significant currency devaluations. Dr. Thornton explains that mistrust among central banks can accelerate inflation.
As trust diminishes, we may also see a swift decline in market confidence, worsening economic conditions. What does Dr. Thornton foresee for the future of fiat currencies?
He predicts a potential increase in the use of alternative currencies if fiat currencies continue to show instability.
Dr. Thornton concludes that to successfully navigate the forthcoming economic uncertainties, investors must stay vigilant and adaptable.
He advises diversifying into other asset classes may be prudent as traditional fiat systems face difficulties.
Ultimately, keeping a close eye on central bank movements will be essential for maintaining financial stability. Today, we're discussing a compelling analysis by Brian Smith on the rising demand for silver and its implications for national security.
Brian's insights illuminate how this surge could significantly impact market stability.
Brian Smith articulates that the rising demand for silver poses potential risks to market stability and national security.
He argues that governments must revisit their strategies for securing critical resources like silver.
Brian points out that industrial demand has surged, significantly elevating silver prices.
This rise in demand has effects throughout financial markets, impacting overall stability.
According to Brian, geopolitical factors heavily influence the supply of silver.
Regions rich in silver could face increasing competition and risks. Brian highlights the volatility in silver markets and its effect on investors.
He stresses the importance of strategic planning during these challenging times. What does Brian foresee for the future of silver in terms of national security?
Brian predicts ongoing price increases as demand surpasses supply, leading to swift policy requirements.
Brian concludes that proactive government policies are crucial for mitigating risks associated with silver.
He suggests that investors should keep a keen eye on developments in the silver market.
Today, we discuss important insights shared by trader Chris Vermeulen with David Lin.
Vermeulen's observations highlight indicators signaling a potential downturn in the market.
Chris Vermeulen discusses critical market indicators that are signaling potential risks.
He warns of increased volatility, urging investors to brace for possible declines. Vermeulen highlights that the current market climate shows growing concerns about a recession.
He notes that this fear is fueling increased market volatility. What strategies does Chris Vermeulen suggest for navigating this uncertain market?
He advocates for a cautious stance, emphasizing risk management and transitioning to safer investments.
What are Chris Vermeulen's predictions for the market in the near future?
Vermeulen anticipates market drops soon, alongside heightened volatility.
In wrapping up, Chris Vermeulen emphasizes the need to monitor market signals closely.
He suggests that diversification in portfolios is essential to minimize risks.
Lastly, keeping abreast of economic trends is vital for adjusting investment strategies. What a whirlwind of insights we've had today.
Absolutely. Chris Vermeulen, Brian Smith, Dr. Mark Thornton, and Dr. Emily Brown really brought their A game.
And it's clear they all agree on one thing. Volatility is the name of the game.
Right. Chris pointed out those critical indicators while Brian linked silver demand to urgent national security issues.
And Dr. Thornton's concerns about fiat currency make a lot of sense, especially in today's landscape.
Indeed. I found Dr. Emily Brown's take on adapting investment strategies in the face of rising interest rates particularly compelling.
Yet, there was interesting divergence too. Like while Chris focuses on what's happening universally in the markets, Dr. Thornton zeroes in on central banks' roles.
Exactly. And Brian's focus on silver's implications stands out against Emily's more personal investment strategy approach.
If today's discussion piqued your interest, smash that like button and subscribe for more expert insights.
Your engagement is what allows us to bring you more valuable content like this.
And don't forget to catch our next episode, where we'll explore the fascinating world of global trade dynamics.
You won't want to miss out on that, so stay tuned.